Pat Kelly, how are you?
I'm good. How are you doing, Matt?
Man, I'm doing well. I was just, again, we were chatting before, and I'm just laughing. It's like, there are so many things in Idaho, this being one of them. There's like, I've never heard about and don't understand. And here you are to explain it to me. God bless you, sir. Thank you for coming today.
Well, thanks for having me on. This should be fun.
It'll be good. It'll be good. So there's a lot of people. I found out about the big, beautiful bill like a week ago because I had a law professor come in and he was criticizing it. It's like, great, man. I really just try to focus on Idaho. But there are problems with funding whatever's in the bill. Did you know that there's also a provision in the bill that no state or government entity can thwart the capacity of AI to make automated decisions in our government for the next 10 years? That's in line like 2,700 or something. Yeah.
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 There's a lot in the bill.
There's a lot there. But this bill, obviously, there are a lot of things that it wants to do. And fine, that's not the point of this. The point of this is one problem with the bill is that it has to theoretically pay for itself. So if you want to do something, you got to pay for that thing you want to do. Part of that is reconciling that cost, right? Hence the reconciliation process. I'm correct so far, right?
Yes.
Okay, great. And part of that reconciliation process specifically has been integrating cost savings that were established in the change of rule sets when this new administration came in that were not in a bill, but change in rule sets around the health insurance and health system, and taking those rules and being like, hey, the change in rules actually like saved us some money. So let's go ahead and insert them over here and we'll just count them in our reconciliation, even though they were rules that got changed when, the new administration came in, correct?
That's correct.
Okay. You're the director of Your Health, right?
Yes, I'm the executive director for Your Health Idaho.
Perfect. I always get directors and presidents and CEOs screwed up. Anyway, so you're the director of Your Health Idaho. You help connect Idahoans to private insurance and federal funding that would help them subsidize part of that insurance, among other things. Help me understand what changes were made and how this affects Idahoans and getting their health insurance.
Well, there's a long story about like what Your Health Idaho is. So maybe we can start with just explaining kind of why we're here. So we were created by the legislature in 2013. We were intended to be an Idaho solution for Idahoans by Idahoans. Our offices are in Boise. All of our people are here, with the exception of our technology, which is a vendor down in California. The way that we work is we work with really well-known insurance carriers in the state. So there are 8 medical carriers, 5 dental carriers, and we offer their plans on Your Health Idaho's website. Those are well-known products. They are available to people, and the shopping experience is similar to Amazon, except for the tax credit. And so in under these rules that were established in 2010 that govern us in terms of a federal level, that tax credit is based on how much money you make, where you live, do you have kids, are you single? And that tax credit then helps offset the cost of a monthly premium. So Matt, you and I were talking before the show. Imagine you were to go on to Your Health Idaho, complete the application, find out your tax credit, and you go on to the shopping. You say, oh, I really want this plan, and it costs $500 a month. Your income may qualify you for a $400 tax credit. That means that you pay the carrier or the insurance company $100. Our system then says, IRS, Treasury, send that $400 to the health insurance company, and everybody goes about their business. You then have private commercial health insurance, just like you would any other way.
Right.
And then you use it just like you would health insurance. So you go to your doctor, you have copays, you have deductibles, all those things that come with health insurance. The difference is that tax credit, and we are the only place that you can receive a tax credit. It is based on your income. So the more money you make, the less tax credit you get, and the less money you make, the bigger your tax credit.
Okay, so, and again, just a real quick recap. You essentially have 3 players with Your Health Idaho sitting in the center. You have the consumer, right? The average Idahoan. You have private health insurance, and you have the federal government. All of these people want to work together. And Your Health Idaho says, hey, Idahoan, come fill out this app. we'll work with the federal government to figure out how much of a tax credit you get, and then we'll tell you what insurance options you have available. And then you can select out of all these insurance options, taking into account how much of a tax credit you're going to get from the federal government. And if there's a delta that you need to fill in, you can decide, because you can get like a really bougie plan with dental, or you can get a base plan, whatever it might be. But you'll figure out whatever that is. And then Your Health Idaho just helps wrap all three of these people together and make sure the federal government is paying the private insurance carrier, they're made whole. The individual Idahoan who's getting the health insurance, they get the health insurance and then cover whatever that delta is if they need to, and everybody goes about their way. And this is particularly beneficial because just outlining what happened gives me anxiety. I'm like, wait, so if I was doing this myself, if Your Health Idaho didn't exist and I had to go out and like find some application and then calculate and then make sure it's over, like, there's no, I'd just be like, forget it, man. Like, I can't do this. Like, it's bad enough already for me. It's like, I hate bureaucracies.
I mean, things are hard, right?
Yeah, right.
I mean,
things are hard.
They are. I mean, we try and make things easier. I mean, our website's pretty straightforward. We have agents and brokers all across the state. So Matt, you could sit down with a guy down the street and say, hey, here's my situation. I have this health condition. Help me find a plan that works best. They can help navigate that for you. And then you really feel good about what you've purchased, and they help you navigate that application process. So really a great way to connect you with the coverage you need. And then also for people that may not have any current health conditions, maybe they're active. I'm a big skier, cyclist, and I want health insurance in case I don't quite make that last turn or have some other, thing that goes wrong. I mean, so it's not just for people that are sick, but it's for that peace of mind for folks that know how important health insurance is. And we can help make that affordable based on how much money you make, where you live, and that family situation. So
Gotcha.
Really, if you think about it, it is helping people help themselves, right? Because tax credits are for tax people. That's what we like to say. You have to earn money in order to have a tax credit. So it's a nice connection of all of those things. And
to be clear on this, and this is a really important piece, at least in my mind, the supplemental funds do come from the federal government. This is not federal insurance. So it's not Medicare, right? Which is largely based on age. It's not Medicaid, which is somewhat age and then income. And it's not TRICARE, which is for vets. Those are all, government insurance carriers, right? This is no. You get a private insurance carrier. We're just helping connect you with the funding that, has been established by the federal government that you qualify for, and that carrier, so that you get that private insurance. This is still operating as a business because, again, you're dealing with private businesses.
That's exactly right. So Matt, if you were to get health insurance via Your Health Idaho, you would have a health insurance company. And imagine you go to the doctor and you want to check on your claims. You would call the health insurance company, not Your Health Idaho.
Because you just connected all the dots.
Yes,
you're like, hey, wait, listen, don't tell me about the rash. You got to call that guy. I don't want to hear anything. I don't want to hear where you got it. I don't want to hear if it itches. Like, don't tell me anything about it. Call your doctor. We just helped you get connected with the insurance and get that paid for. Now it's their job.
That's right.
Got it.
Yep.
Okay.
And sometimes people may tell us more than we want to know, but generally speaking, we just
said, I could tell you about my condition and you would help me. And I have quite a few and they're complex.
We can talk about that later. Maybe we can share. So,
yeah, great. Yeah. One of the last times, I don't go to doctors frequently, you can probably imagine. And one of the last times I went, the doctor was staring at me. He's like, pulled up my thing. And he's like, no medications. I was like, no. He's like, it's funny, like Russian, Ukrainian guy. I can't remember. But the point is, he's like going off. He's like, you don't even get heartburn? I'm like, no, I don't. And he's like, we can fix that. But it was like, anyway, yeah. So I've been blessed with a reasonably healthy and, complication-free health profile. Anyway, so the point is, that's what Your Health Idaho is. And God bless it. Like, wonderful. But the big, beautiful bill and the reconciliation of savings is dipping into the waters of affecting how you guys function. Help me understand that.
Yeah. So we work under rules that are set by the federal government. That's just part of what we do.
Sure.
Part of what is going on with reconciliation is they are modifying some of those laws that we then have to adhere to.
Sure.
A little too early to tell exactly where those laws will be finalized, but certain areas will create extra steps for Idahoans in order to maintain their health insurance. And it'll create extra steps for Idahoans who want to get new health insurance. And that's what we're really watching, I think is a good word for it, making sure that we are educating policymakers, our delegation in Washington, helping them understand if you make these choices, and we understand that's your decision, this is what might happen. So we don't advocate for policy one way or another. We simply say, if you make these decisions, here's what might happen.
Right, right.
And some of the larger items in the bill do directly impact how we operate, and how we operate then impacts how Idahoans interact with us. So, for example, one of the provisions in the law is adding extra steps to our auto renewal process. So, Matt, if you had health insurance this year, when it comes around to open enrollment in the fall, we would reevaluate your income, calculate the new tax credit for 2026, and then we would renew you into the plan that is closest to the one you have today.
And that would happen automatically.
Automatically.
And that assumes you standing in the middle. You're like, hey, Matt still exists. We're going to assume his income is still around this rough area. We're going to keep him on the exact same plan that he selected with this private insurance carrier. We're just not going to make him do anything. We're just going to auto renew. And if Matt doesn't want to keep doing this, he can let us know. And if his income has like doubled or something, what happens if my income has gone up?
Well, we would either know that. So we take your application and we actually check against federal sources.
Oh, great. So you verify that I'm not
absolutely
lying. Okay, great. So we know that Matt's income is accurate. We're just going to auto renew him and we go from there.
Absolutely.
Okay, great. Yep.
And it's always in a plan that's as close to the one you have, right? Sometimes they change year over year, but we tell you, hey, Matt, we renewed you. Here's your new tax credit. Here's your new plan. We encourage you to come out and make sure that plan still works for you. Under the bill, and this might feel like a long ways off, this is actually for 2028. But once the bill's signed, it's pretty hard to change.
Right.
You would have to what's called actively verify that information. And we're not sure exactly what that means, but it could mean that you have to sign into your account, verify the application, click save, and take that extra step. In our last open enrollment, we auto-renewed 96,000 Idahoans. 24,000 of them did something. They updated their application. They verified the plan. Maybe they switched plans.
Sure.
They did something. 72,000 did nothing. They were happy with where they were. They read their notices. They're like, yeah, I'm good to go. That's the 72,000 people that now will have to take an extra step.
Whatever that step may be.
Yeah. And that's not clear yet. I mean, a lot of times the bill language says words that we then need to say, okay, how do we actually operationalize that? How do we put the steps in place?
Right.
But it's clear it will be some extra step that you're not doing today.
Man, if they may be, I can tell you right now, I'm one of those guys. I'm so bad. Because like I get 100 emails a day and 95 of them are just things that I don't have time in my head. And if somebody was like, get an email from the insurance carrier, they're like, hey, don't forget to auto and you got to log in. Anytime somebody says log in, I just like my stomach. I guarantee you I'd screw that up. And then I'd be that dude who you're like getting a hold of. You're like, Matt, if you don't do this right now, like it's definitely going to be a phone call. And they're like, Matt, it's us from like Your Health Idaho. If you don't log in like by tonight, your insurance is dropped. And then it would be a scramble. I got to like, get that stupid thing sent to my email so I can verify my email and change my password. And it's like, it's a train wreck. Like, right. I'm an auto renew guy.
Yeah. And the thing is, if they have this step and describe, what you described is that you're going to miss that deadline.
Yeah, right.
Well, once you miss the deadline on December 15th, that's when open enrollment ends. That's it. You would have to pay full premium because we weren't able to verify your information. So we couldn't award that tax credit. Right?
Got it.
We couldn't determine that tax credit.
So I would theoretically keep my insurance, but the enrollment is we are still going to keep working together to make sure you get that money from the federal government.
But after the end of open enrollment, we wouldn't be able to actively verify anymore. We wouldn't be able to get that for you. You'd be paying full freight for that whole next year.
So this is obviously, I've spoken with all four of the national individuals, and I had Representative Simpson on last, and the emphasis is, look, fraud, waste, and abuse. Everybody's saying these three words, fraud, waste, abuse. And this is one of those things that's attempting to say, hey, let's reduce fraud, waste, and abuse. Now, is there any internal audit that you guys do or verification program to say, hey, look, we don't want fraud, waste, and abuse either. Like nobody here wants this. And this is what we do to verify or with some degree of confidence that we don't have any of that.
We're quite confident that we don't have any. We actually verify many things.
Gotcha.
So if you were to fill out the application, one of the first things you have to do is put in your social security number. And then we ping Social Security and say, is this really Matt? And then we say, Matt said he made this much money. Does the IRS agree? And then if it doesn't, then we create what's called, and this is kind of technical, data matching inconsistency. That's a lot of words. We just call it a DMI. And then you would have to prove whatever's different. So in the case of, let's just say your income had been twice, half of what it was last year, right? So you lowered your income. You would have to produce a pay stub. You would have to somehow prove to us why that number that you put on the application is different than what the IRS is telling us. So we know a lot about our applicants. We verify against all those trusted data sources, including making sure everyone's a citizen or lawfully present in Idaho to receive that tax credit. And if it doesn't verify, you have to prove it to us. Send us a piece of paper and we will work through those things. So we also work with our agents and brokers. And they go through special training with us. They're licensed by the state of Idaho. And consumers can only a consumer can pick an agent. An agent can't pick a consumer. So that protects that consumer. That's just another way that we're mitigating the potential for fraud, waste, and abuse.
Gotcha.
So we're pretty confident that we know exactly who our enrollees are, and that they are who they say they are, and the federal government confirms that.
And here's an interesting piece of this. Because there has been conversation about like these people that are like 150 or 200 years old based on their Social Security number, and the Social Security Service still thinks they're like a real person, right? That is a problem at the federal level. That's not an Idaho-centered problem. It's like, listen, if I ping the federal government gives me bad information. That's not me giving me bad information. That's you giving me bad information. So if the idea is, look, I verify that through Social Security that this person is exactly still, is in fact still alive, that is paying this in taxes. I check the IRS, I check this, then it's like, if I'm getting bad information from you, why are you changing things up for me? You need to be changing things up for you. You're the one with the bad database. I'm just verifying off your database.
Yeah. So we verify as many different sources, and they all come back and tell us Matt is who he says he is. Matt lives where he says he does. Matt earns the amount of money he told the IRS he did. Then we will calculate Matt's tax credit and Matt can go shopping.
Matt goes on his merry way.
Yes.
God bless it.
And then Matt gets to also reconcile, which is not the reconciliation bill, right? But when you file taxes that following year, you will tell the IRS how much money you made and how much of a tax credit you received for your health insurance. And if you should have received more or you should have received less, it's reconciled. So we have lots and lots of checks and balances, and they are technical in nature. But I think when you walk away from it, we know the people that go through Your Health Idaho, who are who they say they are. They make the money they say they make. And they have to check with the IRS at the end of the year to make sure they got the right amount of money.
Right. So the check and balance doesn't just stop with Your Health Idaho, as you're pointing out. It's like, no. You have to go to the IRS.
That's right.
You want to commit tax fraud and some other things. Like that's a big deal as well. And shouldn't that supplant the verification required for Your Health Idaho in the first place? Is like, listen, they're going to have to verify with you about the money. If they're not filing, if they file taxes and say, I made, let's say $30,000. I file taxes and I say I made $30,000. There's your verification that they are in fact alive and they're not making much money, right? Like you already have that verification set up. And if they made more, then they pay back a portion of their tax credit. If they made less, maybe they get more. Either way. But the idea is like we're already engaging this individual on many steps and cross corroborating through different agencies the information they're providing.
That's right. And so by adding these additional steps as proposed, they really won't add anything that we're not already doing. So, I can't speak to what other marketplaces do or what healthcare.gov, that's the federal system if you don't have a state marketplace like Idaho does. We can't speak to what they do, but it feels a little bit like when I was in elementary school and, the whole class got in trouble because I was talking in the middle of the lesson. We know we're doing things right here in Idaho, and it feels like maybe some other areas, maybe stretch the rules a little bit and we'll end up being punished. And ultimately it's Idahoans who will end up without health insurance. And that's not a good thing.
No, that's not. Aside from this verification mechanism, what else, is there anything else that's proposed in the reconciliation that's going to mess with you guys?
Yeah, so there's some kind of, I would say almost like wonky areas of it. Certain plans, when you enroll with your Health Idaho, if your income is in, say, the lower range, you get some additional benefits. They're known as cost share reductions. And what that in English means, if you select a silver plan, we have bronze, silver, gold.
Do you have platinum?
We do have
platinum. There you go. Okay, good. Okay, good. Bronze, silver, gold.
So bronze is cheaper to have, more expensive to use. Platinum is more expensive to have, cheaper to use.
Sure.
Right. So just like you'd think with the metals.
Sure.
So silver enrollees with the right income level, they may pay $10 when they go see the doctor versus maybe someone without that income level or in a different plan might pay $40.
Sure.
Right. So they get some additional benefits. Those are now included in the cost of that premium. And the way tax credits work is they take a silver plan and they say, what's the benchmark plan? And they calculate that tax credit off of that silver plan. I told you this is a little wonky.
Yeah. No, it's okay.
So what has happened in 2017 is instead of paying for those benefits, those cost share reductions and having the federal government pay that health insurance company directly, the first Trump administration took that funding and stopped it.
Great.
So
now everybody pays the whole copay when they the whole $40.
Well, no, actually, those people still receive the benefit.
Oh, gotcha.
But the insurance companies no longer be paying directly for that. So they increased the cost of the silver plan to make sure they were being compensated for that benefit.
To be made whole, sure.
Yeah, makes sense.
Because the insurance company ain't losing a dollar.
Somebody's going to be okay. Yeah.
Somebody's paying for this, and it's not us.
Well, yeah, exactly. So that silver premium went up. That means all the tax credits go up. And so things became less expensive for people, right? That's just a very general, averages. Sure. Well, in the reconciliation bill, they're talking about funding those cost share reductions again. So a little bit of irony, right? In that they
took them out, now they're taking them. Right. Sure.
So what that means is those tax credits will come back down because they're being paid directly for that benefit as the consumer uses it. Silver plans come down, tax credits come down. What people pay then goes up. That's another part. That's called they call it CSR funding or cost share reduction funding. That's another thing that we will see in that reconciliation bill.
And I'm sorry to interrupt. When you say what people pay goes up, yes. So it's like the cost of the plan goes down. The cost share from the insurance company goes down, right? The tax credit from the government goes down. And what's the portion that jumps up for the consumer?
Yeah. So imagine that example we talked about earlier where you enroll in a $500 premium, sure. You get a $400 tax credit and you pay $100.
Sure.
Let's say that was a gold plan.
Sure.
When the silver plan comes down, let's say that tax credit becomes $300, not $400.
Oh, because it was based off the silver plan. That's exactly what you were saying. That's the reference to the silver plan. Got it. So then that delta, if you're anything above silver, that delta increases.
Yes. And even on bronze, because bronze was not increased to accommodate the cost of those benefits, right? When you weren't paying them directly to the health insurance company.
Gotcha.
So again, it's kind of wonky, but what it ultimately means is consumers will pay more. That's to go into effect in 2026. So that's gotcha. Immediate. Now, it's not as drastic as my example. We're probably talking a little bit smaller change, but just for that example, you can see how your cost out of your pocket would go higher every month for that premium.
No, but again, the premium value wouldn't that come down too? Like, wouldn't they go from 500 to like 450 or something? So it's like, okay, Yeah, maybe the tax credit dropped, but like the cost of the program dropped too.
But only in the silver plan.
Oh.
That's the nuance.
Gotcha.
Right.
Gotcha. So bronze, gold, and platinum get hosed.
The people who've chosen that, yes, they will end up paying more.
Man, gotcha. And silver's okay.
Yeah.
Yeah.
Probably.
Okay. Okay. So you have an increased cost to the consumer in some of the plans.
Yeah.
Gotcha. Okay. So like, that doesn't sound too great. Like,
No,
what am I
not,
missing?
It's not great at all. And then if you add one,
No, it's not great at all. I'm not here bearing good news.
I'm sorry. I mean, we could talk about more fun things, but this is, I understand, the process that's going on in Washington. Again, if they choose to make these decisions,
sure,
which totally up to them, these are the things that might happen. So we know that when things get more expensive, people may not be able to afford it, may not buy it. And so we expect that our enrollment will drop, and we expect people therefore to go uninsured.
Because even incremental increases, especially when you're dealing with people that qualify for something like this, if you're at a $30,000 a year income level threshold and you got like, a wife and 2 kids or something, you really don't have like the extra $50 a month or whatever it might be.
Yeah. I mean, it could be for, more of a mid-range income. So a family of 4 making $80,000, they may not be able to afford another $100 a month, right? Maybe their child can't do that soccer team, right? Maybe they can't go on that vacation. So it's not just the lower income people. This impacts all of our enrollees who receive a tax credit.
Does somebody making $80,000 with 2 kids, do they qualify?
They would.
Oh, wow.
Yeah. So since we've already talked about wonky policy stuff where you can just keep going down that road, no one pays more than 8.5% of their income for that silver plan.
Gotcha. So if I make 100, then, and I enroll, the cap would be $8,500 for my insurance.
Yes.
Roughly $700 a month.
Yes.
Wow. And anybody can apply. So like, cause I've been paying $20,000 to $25,000 annually my entire adult life since I've had kids.
Yeah. We should go to yourhealthidaho.org and do the estimator for you and see if you actually qualify. Maybe we can come back and do that another day. But
yeah, there are ways I'd be embarrassed when I put in my income. I'm like,
well, no, we don't want to do
many zeros.
We don't want to put that, do that live or anything. But you and I should talk.
No, 1,000% we should. What about like the gold plan? If I wanted like a really good, is there a cap like no more than 12% of your income, or is that like none of that's unlimited?
Well, the 8.5% is for that silver plan that calculates the tax credit.
Oh, gotcha. And then if I wanted to pay a larger premium out of pocket, that's when I get the gold or the platinum.
Exactly. Yep.
Yeah, we should definitely fill this out.
Yeah, we should talk.
You have my attention.
I can tell you where to go. We'll go to yourhealthidaho.org, click, check for savings or estimate, right?
Gotcha.
And you can put in your information. We don't keep any of that when you go through the estimator.
Okay, great. Okay, great. You can verify with the IRS, I promise.
No, only if you do the application, Matt.
Oh my gosh. Okay, so bottom line is there are some smaller fine points, but ultimately, end of the road comes to, hey man, fewer people are going to have insurance because of one, cost, and because of just bureaucratic busy work, right? The verification.
Yeah.
And you saw this with the great like rebate mechanism of the 90s. Like when Best Buy started handing out rebates, I was a paper boy, right? So all through like high school, I'm like slinging papers, and it would always be, I have like Thursday morning inserts, Sunday inserts, the whole thing. And they were always just like, coupons and ads. That's it. And I'd look at them because at like 5 a.m. I'm like, oh my God. I'm like, oh, this thing is only like $10. And it would always turn out to be whatever the thing is, like say it's an Xbox or, the Xbox, whatever it is. And they're like, no, it's $100. And then you get the $90 rebate, but it's a mail-in rebate, or it's like a 2-part rebate, right? Like one you mail in and then one, and whatever it is, it's like, okay, you could theoretically get this thing for $10, even though it costs $100. But it was the bureaucratic nature of the rebate system that they knew that only like 10% of people were going to actually go through the rebate.
The breakage, right?
Dude, this is really terrible. I feel horrible admitting this. I was, when I got my first house, it didn't have a heater, and we were living in Oakland, and it was like, okay, it's fine. Like because I had no money. My wife and I are living. It was like, we have no money. It's like, I don't care. It's fine. We're tough people, right? we would walk down the stairs. Halfway down the stairs, you could see your breath. And it was like, nope, I'm going back upstairs. Because upstairs there was a wall heater. Like that's all we had. But it was like, there were just 2 bedrooms upstairs. The rest of the house was all downstairs. So it was like, we'd huddle around the wall heater. It was like, and so finally we broke. It's like, dude, we got to get a heater. This is crazy, right? Like this is not, and there was a fireplace, but the fireplace, you know, like you don't know anything about making a successful fire at like 24. The fireplace is not heating up. Anyway, my point is that we get this heater and they're like, okay, well, look, really, you should get this high efficiency heater because natural gas is so expensive. You'll make back your money in 2 years in the delta of like the low end versus the high end. Plus, there's this rebate.
Right.
And no joke, I swear to you, they filled out everything for me. They're like, all you have to do is sign this, date it, and send it in. And that rebate was worth like $600. I never got the $600. Like, I don't know what happened to me at 24, but I was like, I would see it. I'm like, I just need to get it in the, I gotta go.
Yeah.
Like,
oh, look over there. Yeah.
Look at the ball.
Yeah.
Yeah. Like it was brutal. And that's like the nature of the pain of the rebate system, where it's like, if you make people go through even like a rudimentary step, 99% sure, like they're not going to do it.
That's right.
And then you're just going to lose insurance. And it's not even a matter of saving money, because ultimately if you have fewer people insured, you have a higher probability that it's going to be a certain number of people that, you know, get injured or get sick. They don't become gainfully employed and they fall into other safety nets. Like that's the paradox of the insurance, where it's like, if we can provide insurance, we actually statistically have more workers, right? And if we take the insurance away, we have more people that fall into long-term safety nets that we now have to take care of. If we had just gotten them insurance in the first place, they could have potentially engaged in preventative care instead of reactionary care. They would have been better off. We would have had more tax revenue, fewer expenditures because fewer people in the safety net, and we all just whistle all the way home.
Yeah. And when you think about that, Matt, you think about these extra steps people will take. Some will choose to do that and some won't. But if you're a healthy 25-year-old, you may just say, I'm good.
Oh, yeah.
And then what happens is, just because you're uninsured doesn't mean you don't get sick or you don't have an accident, right? So then it creates this uncompensated care, which was what you were talking about.
Yeah.
But also it means that only the sickest people are left in the insurance risk pool that we talk about. Well, when the risk pool gets sicker, premiums go up. So everything gets more expensive for those that did take those extra steps. And that's really this overall concern with this, is we start to kind of destabilize the overall ecosystem, right? You described going into these other safety net programs. You can get into uncompensated care. Like there's a lot of things that all interact together. And that's another more, broad-based concern that we have with this. We've worked really hard to lower the uninsured rate in Idaho. It's about 8.9%. It's about half what it was when we were created in 2013.
Really?
Yeah. And so these actions that we're talking about, will reverse some of that progress that we've made. And so we want to make sure that people understand what's in here, what the risks are. And then our legislators and our delegation back in Washington can make informed choices.
If I may ask, if we went from roughly 16% uninsured in the state of Idaho to 8% uninsured in the state of Idaho, what's that last 8%? Like, is it that they don't know about this program? Is it that they don't qualify? Like, what is it?
That's the $64,000 question.
Well, how did you come up with that number?
Well, I did.
It's not $1 million. It's not. That's the $37,582 question.
Yeah. No, that's that old saying. I think there was a game show back long time ago, right?
Yeah.
The $64,000 question. Maybe it was the pyramid game show. You remember that, where they sit in the middle?
Yes. I always thought it was the $1 million question.
Maybe it's $1 million.
Maybe I don't know. Maybe that was a Jeopardy thing. Yeah. I don't know. It doesn't matter. Yeah.
But I mean, bringing up Jeopardy, right? This is the challenge. I mean, that when we start to create barriers, people will just choose to go uninsured.
Sure.
Everyone ends up paying more. So I think, when we talk about why people aren't insured, that's a personal decision. We work really hard to make sure people understand what Your Health Idaho is, that they're well informed when it comes to their options, and that they know how to go about our process. And, working with those agents, trusted community partners, your neighbor, that's what we're here for. And just like talking today about things that are in reconciliation, we're here to just inform.
Gotcha. Well, listen, I really appreciate this. I didn't know about any of this, and the whole 8.5% thing, like, you got my attention real fast. Like, it's so astronomical. The cost is, and again, I've always been self-employed, so I've never, people talk about buying private insurance or, insurance from, their employer, whatever it might be. I've only ever known buying my own insurance. And yeah, I can see that it is a huge problem, right? And it's like, if you make $100,000, my insurance, the former state was like, if you made $100,000, my insurance was well over 25% of your gross income. Yeah. It's like, and that's not all tax deductible, right? If I was self-employed only, I think it's like half of it's tax deductible or something. It doesn't matter. You're not a tax specialist. But the point is, like, so if you had to fork over, let's say $25,000 after taxes, and you're making $100,000, that's what, like 36% of your after-tax dollars just going to health insurance. Yeah. Like, it is a huge problem. It's like $2,000 to $3,000 a month just to make sure if I break my arm or if something happens with my kid, like, I have insurance. It's a lot. It's a problem. So understanding that you guys exist, man, I'm going on the exchange for sure.
Yeah, we should talk.
Yeah, we should.
YourHealthIdaho.org.
YourHealth.org.
Click on estimate.
Oh my God.
We can talk.
Yeah, we will. Pat, thank you for coming in today. I really appreciate you. When all the process is over, I'd love to reconnect with you and help people understand, okay, this is what you have to do now. Got to pay attention to this. Maybe even if this does come to pass and people need to engage in, verification. We do like some PSA around the re-enrollment time.
Yeah, I'd love that.
And help people really understand, like, listen, if you get your health insurance through here, you have to go verify this stuff or it's lights out, man.
Yeah.
Yeah.
Exactly.
Perfect. Well, thank you for coming in, sir. I appreciate it.
Thank you, Matt.